Welcome back to the Energy Signal Podcast, Episode 4, your one-stop shop for the latest trends, policies, and market movers shaping U.S. and global energy landscapes. I'm your host, Josh Lefebvre, joining you from the energy capital of the world, Houston, Texas. We're recording this episode today, Sunday, August 24th. In today's episode, we'll be discussing why oil is ticking higher while actually natural gas is sliding downwards. A $5.6 billion Canadian oil sands mega merger, and why the US just ordered Ørsted to halt its offshore wind farm that was actually 80% complete. Stick around, you're not going to want to miss this one. This episode of the Energy Signal Podcast is brought to you by StageTracker AI, the real-time frac intelligence platform that's powered by AI agents that help engineers and operators stay ahead in the frac game. Whether you're trying to optimize pump schedules, reduce NPT, or benchmark crew performance, StageTracker gives you the live view of what's really happening, stage by stage. No more waiting on the post-job reports to know if you're behind. Learn more at stagetracker.ai because every minute counts on the job. So first up, we have our weekly commodities. And the first one is obviously the price of crude oil through the WTI index. That actually shot up from $61.74 a barrel up to $63.42 a barrel. That's a 2.7% increase. Next up, natural gas using the Henry Hub index. That actually fell quite a bit. It went from $2.88 down to $2.69, a fall of 6.7%. According to the U.S. Energy Information Administration, crude oil inventories actually decreased more than expected last week as imports fell and exports rose, according to data released by the U.S. So basically, less oil in storage, higher exports, stronger demand means an upward pressure on oil prices. But I mean, we also can't discount the fact of the looming war of Ukraine and Russia that seems to have no end in sight. And then in terms of why the actual natural gas price fell so much, as I mentioned last week, it's been a much colder August than expected. And according to weather trends, September is not looking much better. So it's only natural that natural gas would fall. No pun intended. Next, we like to go over our three biggest energy stocks in the US. And without a doubt, the biggest company of them all is ExxonMobil, ticker symbol XOM. They started their week off at $106.49, and they rose up to $111.28, a massive increase of 4.6%. Next on the board is Chevron, ticker symbol CVX. They started their week off at $156.55. They went all the way up to $158.18, an increase of 1%. And then finally, we have ConocoPhillips, ticker symbol COP. They started their week off at $95.33. They finished off at $96.78, an increase of 1.5%. So although we've been saying that these companies all have solid financials, solid principles, most of their gains were actually made on Friday. And I don't think they have that much to do with the price of oil. I think if anything, it had a lot more to do with Jerome Powell. He announced the possibility of the Fed cutting rates on Friday. So we just saw green across the board for basically all energy companies. But the biggest story is ExxonMobil's, their 4.6% increase week over week. And that more than anything actually has to do with Exxon's amount of cash, of free flowing cash. Unlike their peers, this big stockpile of cash is actually going to allow them to withstand any pressures as OPEC continues to increase its production. So it'll be interesting to see how this plays out. So I wanted to preface this section by stating that although the Energy Signal podcast does cover stories from across the globe when it comes to energy, we do have more of a focus on North America, specifically the Permian and the Eagle Ford. And again, that's just because that's where we're located. We're in Houston, so we feel like we have a certain edge when it comes to those stories. But without further ado, our first story is that Crescent Energy, the energy giant, is valued at about $2.5 billion. They're actually in talks right now to acquire Vital Energy, valued at roughly around $600 million. On that news, Vital Energy shares jumped 7% to $16.92 in after hours trading. Now, Crescent Energy, on the other hand, their shares slipped about 1% to $9.85. If you recall, Crescent had previously spent about $1 billion in January to acquire Ridgemire Energy assets in the Eagle Ford. So this is just another massive play for Crescent as they continue to gain market share. Vital brings about 267,000 acres in the Permian Basin and 137,000 barrels a day in terms of production. Our next story is another acquisition, this time more on the Canada side. This is a Wall Street Journal exclusive. So Cenovus Energy is set to acquire MEG Energy, which is a major oil sands consolidation. So the Canadian-based Cenovus Energy announced a $5.68 billion USD acquisition of MEG Energy, one of Canada's largest oil sands producers. Our final story, and this is an interesting one, Trump is actually planning on making use of Cold War era plutonium for nuclear power. Trump plans to offer 20 metric tons of this Cold War plutonium as reactor fuel instead of US having to dispose of it. Now, the Department of Energy will provide it for free. However, the caveat being that the industry that is taking on this plutonium, they're going to be responsible for covering processing, transportation, and recycling fees. So they will take all of those costs, effectively taking that cost away from the US. Now, the plutonium was originally planned to be converted into mixed oxide fuel during Trump's first term, again, to be used in nuclear reactors, but the program failed due to a massive $50 billion cost, right? Again, this stuff is very, very expensive to process and to dispose of. Critics are calling this plan very risky and would actually prefer if the US actually took care of disposing that plutonium itself. But hey, I guess we'll see how this one plays out, because this story has not yet been confirmed by the Department of Energy, but it is stated that it is in early drafts. We actually have a few interesting renewable stories this week, and without a doubt, the biggest story in the renewables world is that Trump administration has actually ordered the Danish company Ørsted to halt nearly all of its finished $1.5 billion wind projects off the coast of Rhode Island. And this comes despite this project being 80% complete, with over 45 of the 65 turbines are actually already installed. So Ørsted, which was already under heavy financial strain, it's seeking $9.4 billion in emergency rights issues to stabilize its balance sheet after multiple US setbacks since the Trump administration took office. This project freeze, it was meant to power 350,000 American homes in the Rhode Island and Connecticut areas, raising many concerns about U.S. jobs and clean energy investments. Now, from a U.S. perspective, this again underscores the massive shift, specifically for foreign developments, in potentially diverting billions away from Americans as America goes more back towards fossil fuels and to coal, etc. Our next big story is that the Treasury Department actually had some big announcements about the 30% federal clean energy tax credits. Now, if you remember Trump's Big Beautiful Bill Act, which was projected to basically, under the Biden administration, anybody who started any kind of clean energy project was given up to a 30% tax credit and bonuses. Now, the previous deadline to enter in these project bids was 2032. Now, under the Trump administration, it was slated that these projects had to commence before July of 2026. Now, some good news from that is that the Trump administration, they actually narrowed what the definition of is in terms of under construction. So basically they said that in order for these developers to qualify for the tax credits, they simply had to show that they had committed capital to the project. For example, spending a certain amount of money up front. So they didn't actually have to start construction by 2026. So, this still allows many of those slated projects to lock in those tax credits without actually showing any physical progress. I mean, these big construction sites, they take a while to really kick off. So on that news, US shares of solar companies rose significantly after those announcements. So overall, I think it was a great week for the energy sector. I mean, with the price of oil going back up, I mean, that's certainly a good indication of things to come. I mean, I know we had mentioned that weaker than expected job report back in July. Demands were expected to go down, but I mean, now we're seeing evidence of the contrary. So, I mean, as long as we can get oil in that $65 to $75 range, I believe that helps both the producers, the consumers. I mean, I am in Houston, and this city is so reliant on the energy sector. So So, I mean, there's no denying that when the price of oil is up, this city really thrives. So I just want to see oil in a good range, a good price range. And then in terms of the other big story of Trump, his administration becoming a little bit more clear on the Big Beautiful Bill Act, basically kind of helping define what it meant to begin construction before 2026. I mean, if all these companies have to do is show that there's a financial commitment and they could still apply for those tax credits, hopefully we'll see some of these projects still coming through. We've heard a lot of announcements over the last couple of weeks of a lot of renewable wind, solar projects just completely pulling the plug because they just simply weren't able to survive without this tax credit. So that's a good story too. Again, it's important that you turn into the Energy Signal podcast every week to get this news. Thank you so much for joining. Until next week, this is Josh from the Energy Signal podcast, signing out.